Guys, how are you? Happy Monday, last day of September. Please give me some okay if you can hear me and if you can see the screen. Give me please some confirmation. Why don't I see the chat? Here we go. Just 1 second. My chat here goes very small. Oh, beautiful. Now I see it. All right, perfect. Thank you very much for the confirmation, guys. I hope you had a wonderful weekend, refreshing, filling with energies and ready to work. So let's begin then. For all those of you who are watching for the first time, first of all, welcome to our family. Two things I will ask from you: take it step by step on your pace. First of all, inside the members area, make sure you watch the video tour to understand how to use the members area in your favor, each of every components we have. The main ones, of course, would be the recommended webinars, the downloads area, the SPT, okay, all that very, very helpful, and of course the media zone where you can find all the webinars, and the live trading room, basically everything. Just to take it easy step by step to check on your pace, and the trading report. You have also a video explains how it works. Below you will be able to find a list of the webinars to watch to understand how and what terms we are using in our trading, how do we trade. This is the watch list. Basically you click on the link and it shows you what do we expect of every single instrument to happen. Okay, and below detailed explanation about every single time frame of the technical terms. This report is a mirror to what we discussed in the live trading rooms. So let's begin then. Let me just remove that to the right so we can go over that. So we will start now with the European pairs. As always, there is some change of the list since the last time we met previous week. Okay, and let's go over that. So we've been trading Euro Kiwi, Euro Yen, and Euro Pound the previous week. Okay, so let's start with the Euro Pound. It was the first one. Our idea was, and still is, bullish, and here is why. According to the daily, we are in this double cycle, expecting correction. After the correction, very likely we are back to sell. But meanwhile, we are in corrective cycle. 4-hour chart verified every single legs of the daily to be cycled by itself. Okay, and we got the bullish structure on the 1-hour chart verifying the buys. That was the higher highs, higher low structure. And after that, our plan is, according to here, bullish, expecting the bullish continuation. So what we want to see is the 4-hour chart becomes corrective, something like that, or any sort of a range, right? Once it completes, we would be after, again, likely after sales again. So how do we approach that? Exactly like we started from the previous week. We are in play of 3 higher highs, 3 higher lows. Therefore, buy retraces we should provide us some buy opportunities. Retraces could be in 2 waves, ranges, or bullish hidden divergence. And this is pretty much what we face since the morning. Also, good bounce from a clearance zone. Hold of a massive supportive area as well, as you can see here. Trend line, all in play. Our plan remains bullish short term for the euro pound, expecting to provide us further buy opportunities. Invalidation for such plans, since we are dealing with corrective cycle, is of course if we go and close below 61.8, as for now holding, and in one shot. If it's corrective cycle, 2 waves or range, totally acceptable. Then the last low is the invalidation. If it's one shot, then we do not want it to go below 61.8. So far, everything is in play, nothing really changed. The plan remains the same. But then we had two pairs, the euro yen and the euro kiwi. The euro kiwi we were trading to the downside, bearish, expecting a correction from the daily cycle. This is our daily cycle, referred to, of course. Right? Bearish divergence in play. 4-hour chart verified each of these legs to be cycled by itself. We got the divergence on each of them, and we expected corrective cycle. So we got it in play right here. The question is, so what's next? Are we bullish now again? And here comes the lack of synchronization at that moment that makes me double think. And what does that lack of synchronization I'm talking about? The last divergence from daily was and remains bearish. The last divergence on the 4-hour right now is again bearish. Bearish hidden divergence. Divergences do not fit into cycles. And if we go to the 1-hour chart, we can also see that there is a possibility that all that is a structure of a triple double by itself, or triple and a range. And by making that a possible structure, this becomes a possibility of deeper 2 waves correction of the daily cycle, which completely is acceptable, because according to the daily cycle, the correction could be down to 38.2, right, or in some sort of a range. Total possible scenario, and therefore this becomes as a doable correction as well. So from my point of view, the euro kiwi, which for long term is bullish according to the weekly triple cycle and double wave correction, that's the expectation for the long term, is in lack of synchronization between the long-term cycle with the shorter-term cycles, with the corrective mode, which turns to be now bearish divergence on both daily and 4-hour as well. In such cases, it's a neutral move. That's what I call a salad. And I would like to see a clearer price action of the pair. Ideally and personally, what I would like to see is this. Assuming we get it, this should become a very nice buy opportunity. If we don't get it, then I would want to see the higher highs, higher low structure, 2 waves correction, and a breakout. If that happens, we'll be back to bullish. But meanwhile, it does not happen. And the rest of the conditions are confusing. When that happens, as I said, my personal view is to move to neutral. So the euro versus the kiwi, which was very nice to us previous week and delivered, right now is going to neutral and is out of the list until it gets a bit clearer. Okay. Another one that was on the list previous week and removed right now is the euro yen, and after that I will include the new ones of the euros. Let me just mark the euro pound which we discussed. Was the euro yen. The plan was looking for the buys according to the weekly bullish divergence and triple cycle expectation of 2 waves correction. However, we got one shot to the upside, which now provides a bearish hidden divergence on the daily. Already lack of synchronization with the weekly, but it's not a problem because we are good to see the 4-hour chart making bullish divergence by itself. And 4-hour chart does have a bullish divergence, but 4-hour chart also has a bearish structure of lower highs, lower lows. And the rally to the upside was 2 waves, which means after this breakout, good chance it's about to continue lower. So too many warning signs with the euro yen as for now, and the fact it failed to gain the momentum after the 2 waves correction, right? A new momentum, trendline break or higher highs, higher lows. The fact it failed to regain this momentum is a fact that the pair has currently lack of interest from the money flow from the traders, and if there is no money flow, there is no interest from ours. So neutral it is. Okay, it's also dancing around the 61.8 retrace, right? Too close to that, back and forth for too many days. That means not good. As for now, removing, going on neutral. So that's from the previous week follow-ups we have. The euro pound is a good one for us. The euro kiwi was a good one for us, now is neutral until it gets clearer. And the euro yen, which simply does not provide any momentum, should be removed. What can we learn from that, guys? As I always say, trade facts, not wishes, not expectations, not plans or rumors or beliefs or whatever it is. Trade facts. Nothing tells you the story better than the market. Not my line, not your line, not anyone else's lines, and definitely not analysis from whoever of the analysts in brokers company or institutional companies are. It's only the price, what the price delivers. And as for now, the price delivers warning signs. I'm talking about the euro yen, of course. So what are the new opportunities we have on the list for today? Euro franc and euro versus the Aussie. Let's start with the euro franc. What do we have on this pair? Bullish divergence on this double cycle from the weekly. Hold on the daily. Bullish divergence forming on the daily. Still did not tick, but likely to. I mean the MACD to tick to the upside. This is yet inside the daily triple cycle and required a correction. Correction could be 2 waves still. Correction could be a range. Both scenarios are still totally in play. Right now, if it is a range, we are in the bottom of the range. Okay. Now that will require verification. The 4-hour chart would have to provide its own bullish signs and divergences. And we have it clearly on the bottom. As per cycles, can argue here. There is nothing too obvious and too clear in this structure. As per divergence, it's pretty obvious. So we need better signs for reversals. What kind of signs? Higher highs. Do we have it? Yes. We will require on the lower time frame bullish structure, trend structure, higher highs, higher lows. Do we have it? Yes. Therefore, euro franc becomes bullish. The warning sign would be if we suddenly cross below 61.8 of this rally in one shot. This would be a warning sign that maybe the buyers are not strong enough. But as for now, everything looks okay, and euro franc looks getting ready for the buys. So this is the first one, new edition of the euros for this week. Next one, euro versus the Aussie is back in play. What do we have on this pair? So back to the long-term cycle that could provide two waves or any ranging conditions, whatever it is. But as for now, the pressure is under cycle is bearish, and the pressure of the last divergence is also bearish. Sorry, the histogram. Sorry. Checking the daily time frame to verify from the bounce of the extreme divergence, the pair making lower highs, lower lows, two of them, not three, but on the same time, lack of ending divergence. Therefore, the expectations, according to that, are for trend continuation to the downside. The 4-hour chart has the structure: lower highs, lower lows, two waves correction, which was very nicely broken the previous week. Since the daily is somewhere in between divergence, as we can say, the 4-hour chart we wanted to see bearish structure, false breakout and lower lows, or three lower highs, three lower lows. And this is what we actually get. Right? Lower highs, lower lows coming in play. So the euro versus the Australian, expectations are to the downside. Sell the rallies will be the plan. The current invalidation would be this falling trend line and the level of 61.8. If we suddenly go above that, it would invalidate the bearish plan. Do you see the flow I'm using, guys? Okay, always 3 time frames. That's how I love to do it. I love to do it with cycles, and if cycles are not in place with divergences, even though I personally always love the existence of a cycle in play, there are multi ways to do that. You can do that with channels or multi moving average or multi MACD, multi-time frame, or Elliott waves, or whatever it is. There are a lot of ways to do it. But it's very, the importance of the multi-time frame is it tells you the story of how the money flows in between different time frames, therefore different futures options positions. Okay, and if all of them are synchronized to the same direction, then that's what we want to trade. Jose, what do you say? I should do a video about alternative to cycle. Why? If cycles and divergences is what I use, why should I do the alternatives? If you find it complicated, then you should learn the alternatives, not I should teach them. If I know how to drive a car and I don't know how to drive a motorcycle, how can I tell how to drive a motorcycle? I can show what I do. What theoretically should be done, I can't. I can just explain, but that would be just theoretical material you can find everywhere. You don't need me for that, right? You don't need me for that. I can explain best what I use on daily basis. Then I can explain the logic behind it. All right, let's continue. Good try, Jose. Good try. Never costs money to try. So that's from the European pairs, and for Monday today we are going with the Euro Pound, Euro Aussie, Euro Franc. That's the trio of the euros we have on the list. As for the pound pairs, there are two of them, and this would be the pound Australian and the pound Kiwi. The rest I find currently less attractive. Well, fair to say the euro pound is also one of the pounds because pound is involved here, right? Pound versus the franc, we did get what we wanted previous week. We traded the sells and we enjoyed from the move. The waves, bullish divergence, done. Is this one ready for the buys? I'm not quite confident about that. I couldn't match cycles in play yet. I want to believe so that it does. However, the way the price moves, I tend to think that we are going into something like that. This area, closer to this area, right? If that will develop this way, good, we can stop, discuss again to see how that develops, and then bring in the buys. But as for now, the sells delivered not enough reasons for the buys from my point of view in terms of cycles and the structures. So this one is still neutral. Pound dollar, nothing clearly, well, to me, maybe so to someone, yes. That's what brings me back to these two, which I find interesting, the pound Kiwi and the pound Aussie. So let's start pound versus the Kiwi. For the long term, we are super bullish here. And why? This cycle cannot be denied. It's a monster. If there will be no surprises, that should be huge move to the upside. And I say surprises, I mean the fundamental changes that could go with the with Brexit and so on and so on. But technically speaking, this one seems to be prepared for a monster. The weekly lined up perfectly in the long-term expectation by making the higher highs, higher lows, 2 waves correction or a range correction, doesn't matter how we name it, and a break of the trend line. Can't ask for more, right? However, to trade it or to join that, we need a lower time frame to be synchronized. As for now, the daily provided the rally, provided the bearish divergence, 2 waves rally. It could be also broken into 3 waves rally, no problem. Bearish divergence in play, and corrective cycle should be in play. Corrective cycle could be 2 waves or some sort of a range. But at that moment, we got only one push to the downside. That's what makes me believe that we are in front of second leg. So personally, I think pound versus the Kiwi is still sell the rallies on the short term. Once it completes this correction, no, why it's not throwing here? Once it completes this correction and a bullish divergence would come in play, it would be very good to start looking back to the buys. Okay, and the pound Australian, what do we have with this one? As per the structure sorry, of the higher highs, higher lows. Where my highs gone? Here. Yeah, no, sorry. As per the higher highs, higher lows, this is also official cycle. Corrective cycle should be in play, therefore a 2 waves or a range. which we can simply fit in both here. False break, false break, false break. We're still in this long-term range. In the ending of the triple cycle, which also could be simply broken into this way, and this could become the range. With a simple expectation, drops and buys. Now, the daily fits in by making higher highs, higher lows, and without any ending divergence. Therefore, we should expect it further continuation. The 4-hour chart makes the correction, builds the two waves, and builds a bullish divergence. So the break of this trend line should be a sign of the buys. Okay, so pound Aussie in pending condition for bullish continuation. Break above the trend line should be a good sign for that. Now, here comes the question. Should we drop lower to 1-hour chart or 15 minutes to try and find any opportunity? The answer is no. Why no? Because if it's a weekly cycle or directions with the daily confirmation and verification, the trading time frame should be the daily or the 4-hour chart, not lower. We can go lower if we work lower, which means daily and 4-hour verification, right? Or 4-hour and 1-hour verifications, combinations. It's important to remember that because sometimes it's so tempting, even though we define, let's say, the long-term direction, but then we see something super duper attractive on the 1-hour chart. It's hard to it's hard to deny, right? Or even 15 minutes. It's hard to say no for a temptation, especially when money lined up on this formula. But for the correct technical steps, correct trading steps, it's important to remember with what directions and combinations you work with. So pound Aussie break of the trend line is what we want to see. If we get a new low, no problem, the trend line still remains the same. We can of course then include the lower lows and higher highs turn around, but it's too early to judge because we don't have the condition yet. Next one on the list would be the Australian and the New Zealandians and the dollar pairs. So before I move on, is there any question about anything as for now, guys? Only from the ones I explained, please. If a pair is not on the list, that means personally I could not combine any cycles in play or end to avoid overexposure to same instruments. I try not to include normally more than 3 of the same currencies to expose, same currency in different pairs to expose to, and even then to choose the one that has the best risk reward. Great, so let's continue. Australians, we had 3 of them. Pound franc Hamad, I explained before why it was removed on the list. It was explained a few minutes ago. If you missed, please watch the recording, which will be uploaded, okay, to understand why it's currently not traded. Was traded previous week, currently not. All right, so Australian versus the rest of the pairs, we had 3 of them: Aussie CAD, Aussie franc, and the Aussie versus the Kiwi. So let's start. Aussie versus CAD. It doesn't open here. Okay, let me bring in the report. That was what we expected to see after the lower highs, lower lows, pullbacks, and continuation lower based on the bearish pressure of the daily divergence. However, what happens with, well, this pair delivers right here. However, what starts to happen now is the fact that there starts to be too many spikes on the bottom and two rounding direction. As you can see, the momentum was gaining here. Now it's losing, right? You can see the rounding bottoms. Instead of gaining bottoms, rounding bottoms. And the MACD in play, of course. Massive support in play, of course. Trend line that refuses yet to be broken, of course. Right? All that, and the false breakout that starts to appear one after another. One horizontal, one alternative false break, and it starts to look like a cycle by itself. So this one is losing interest, losing momentum, and even though I expected to push for one more low, there is a good chance that this one is in front of correction. Correction that could be two waves and a range, correction that could bring a range for a while and then move down. Personally, it starts to be too tricky on all the time frames. On the short term, they are losing the synchronization with the higher ones, therefore removed from the list. Another one that is removed from the list is the euro versus the kiwi. Why? So for long term, this one is for buys. Still remaining under the bullish pressure here, looking for buys, setups only in the bottom of this range, looking for rallies. But the short term, the daily mainly, right, gave us the triple cycle with the bearish divergence and verification of each of the legs on the 4-hour chart. So we have been trading the sells previous week, enjoyed the two waves movement, enjoyed the bullish divergence that came after that. And now the cycles, because if the daily is a cycle, the daily should be the corrective cycle, right? If this is a triple cycle, daily should provide correction, two waves or a range. But as per divergences, the daily now shows a bullish hidden divergence, right? With the 4-hour chart, bullish basic divergence. So we are losing the synchronization of the cyclic logical with the divergence logical. And I personally think this one is going for something annoying here in this sort of a structure. And that's why currently I believe it's best to avoid the pair. I might be wrong, but personally, as for now, for me it's neutral. Lack of synchronization between the divergences and the logic of the cycles lead me to simply say, okay, the short-term sells we wanted to trade paid. Right now the divergences are against the sells, but the cycle is against the buys. Removing that and waiting for clearer picture. And the one that is back to the list, Australian versus the franc. We removed it on the previous week to wait for clearer setups, and here is what we are trading here. So first of all, the very, very, very long term. Why I am interested in buys much more than I am in sells, due to this triple cycle that make me think we are in front of something very nice here. The weekly provided us its own cycle with a bullish divergence. Daily made one leg to the upside already, which was confirmed as a cycle by itself on the 4-hour. Oops, like this. Special sort of a special cycle. and provided a correction. And now what's happening since? We got a bullish divergence turning around on the 4-hour chart here. We are making the higher highs, but mainly we are building up again the structure of the higher highs, higher lows. Expecting the daily second leg 4-hour verifying the structure of the legs to be cycles by itself, and the 1-hour verifies the opportunity to trade it. And what we are facing here is the higher highs, higher lows structure. What brings me to think Aussie franc is ready for buys. Invalidation, it's very important to have one here because look at the 4-hour. It could easily turn to be triple double, and if we break below the trend line, it invalidates the bullish pressure. We have to be very careful here. That's why the bullish plan is, as long as we hold this trend line and the 61.8 of the rally, 61.8 retrace of the rally. Okay, so the expectations are to the upside, but the market builds a possible warning sign structure here, and we better be careful, because if we break this trend line, it immediately brings back a possibility of this triple double structure, which would not be synchronized in the longer time frame and cannot be traded. Okay, so that's the Aussie franc with a more aggressive maybe view, but yet correct. So it's important to mention. New Zealandian pairs are back on the list, and there are two of them, New Zealandian versus the dollar and New Zealandian versus the Canadian. So New Zealandian versus the dollar suggests us 161.8, slightly lower, and this cycle level 100 even slightly lower than the 161.8. This becomes a very, very interesting box. Now, why does this box come in play again when there is a bullish potential divergence forming? Because if this is to be an ending cycle, it requires a reversal. That means 2 false breaks and higher high, or 3 higher highs, 3 higher low structure. As for now, it's missing for both. Therefore, as we made this correction and went below the 61.8 of the correction, game over, the pressure is back to bearish. So if we take a look on the developing legs from the daily, you would see that 61.8 magically fits in the longer term cycles. Therefore, the pressure is bearish. So the expectations from this pair, as long as we did not have any reversal structures, meaning 2 false breaks and convergence like this, convergence, or higher highs, higher lows, the pressure is bearish and we're looking to sell the rallies. New Zealandian Canadian fits in exactly the same logic of developing cycle. Want to bring back the long term here. This triple cycle that is still aiming the 50%. Okay, you can see. This one that still maintains the lower highs, lower low structure. The weekly that is yet developing its own last leg. No divergence in play here. Currently, no reversal in play. No 2 false breakouts. No higher highs, no 3 lower highs, lower lows, nowhere, even not on the 4-hour chart. It refuses to do that. No false breakouts, no higher highs, higher lows. It's back to bearish. And the expectations are according to the developing cycle there. And this channel we're yet respecting. There is a room to go likely. So as long as this one is coming from developing cycle and lack of reversal signs, therefore the plan is sell the rallies. Dollar pairs, dollar yen and dollar franc, we had and we still do couple of them in play. Dollar franc, after the retraces we've had, 3 higher highs, 3 higher lows, retraces that we traded previous week. And then we are back to bullish. Dollar franc. As the 2 waves retrace we got, ranging condition, and further continuation upside. So that's pretty much still in play, nothing really changed. The bullish momentum is yet ongoing. Reminding you that it all comes from the weekly bullish structure currently in play, higher highs, higher lows, 2 waves retrace, trendline breakout. It fits in perfectly with the daily development, which has higher highs, higher lows by itself, retrace, pull back, and still pressure. This pressure is yet ongoing. Dollar yen, same story exactly. We've been trading the short-term sales, then switch to the buys again. Corrective cycle in play. We expect 2 waves from the daily time frame to fit in the weekly cycle. Due to that, the bullish pressure is yet on, expecting it to continue until it would become a bearish divergence, and then we go neutral. Meanwhile, nothing changed. The bullish pressure is yet on. All right. Let me just mark it here. Discuss. And the last one of the forex is the Canadian versus the franc, which is back to bullish. And here is why. So first of all, the reminder of the long term, like the Aussie versus the franc. Lower highs, lower lows, triple cycle, the expectations of a monster here. But this is a very long term, right? The weekly was building it up in sort of a range. So while I was expecting to see slightly lower few weeks ago, the fact it refused and hold make it possible like a horizontal hold. We don't have a breakout of it yet, likely to happen. And if that will, and I repeat, if that will happen, note that the daily is building up that bullish structure of higher highs and possibly higher lows. And from this part exactly, and the fact that there are no bearish synchronizations on the bearish direction, the fact that the daily is building its structure, the fact that the 4-hour is building its structure, lack of divergences all everywhere, right? And we are into this sorry, bad drawing, and we are into this channel to the upside, all the higher highs, higher lows in play. We got these 2 waves correction, breakout, and we are gaining this momentum since no divergence. All that brings in the expectations of bullish continuation until we will complete the higher highs, higher lows here. That's what the market provides us as for the beginning of the week. from the Forex view. A few more of the commodities. We are trading two on the last period, gold and natural gas. So gold, we are bearish after the rally, sell the rally's plan. This one, when it moves, knows to deliver. The cycle we have been trading on the gold is the triple cycle, expecting corrective cycle in two waves or a range. I remind you, we never know in advance how it will be developed. Right now it develops in two waves. I've been asked a lot about this head and shoulders, is it valid or not? It definitely looks like, but personally I dislike the gaining momentum of the second leg. I do not think this is head and shoulders. I might be totally wrong. You know, we have pattern traders in the group, so it's best to ask them. Personally, it's not valid one. It definitely is valid structure of the higher highs, higher lows, and two waves correction. Cycle and two waves correction. So the momentum is still bearish. We definitely will need to pay attention to the daily bullish divergence developing. And I said developing because we have no idea when it will tick. 4 hour has nothing at that moment, right? So at that moment, the gold was and remains still bearish. Very important suggestion for all those of you who run into such positions. Don't fall in love with a move, and if you gain a good risk reward, like the trendline breakout previous week, for example, if you gain good risk rewards, do not let your profits be under risk of randomness. Protect your profits, cash out your profits, partial, manage your profits with trading stop loss, etc., etc. But don't let them be risk under the randomness, because everything could happen with every tweet from the leaders or whatever it is, and the gold will suddenly go up again. So it's important to remember that. Okay, and meanwhile the pressure remains bearish, so we don't change that. And the last one is the natural gas, where, as explained, we are into the corrective cycle, slowly building up a bullish hidden divergence right now. 4 hour chart builds a double trend line and bullish divergence. This is the trend line. Break above that should provide further rallies. Indices are not in play for us yet. I personally see nothing there. From the stocks, Adidas failed for us. This was the sell I expected to see developing. Failed to deliver. It was a fake breakout here, and the sell idea failed. As for now, Adidas is removing from the list. Buyer remains under the expectation of this triple cycle to continue to its correction. Therefore, this sort of movement. Deutsche Bank is not changed for the invest, and as for now, no new ones that I would find interesting. However, there are two opportunities from the cryptos which I definitely find attractive. First one is the Ethereum versus the Bitcoin, which is lined up right on the 100 level of this cycle with the closure to 61.8 magnet area of this cycle. Very massive magnetical area, very strong bullish divergence developing on the weekly. Special cycle that ended on the last leg from the daily in the condition of ascending triple cycle down, and the fact that I believe we are going into good corrective cycle here, at least towards the correction of this cycle, likely towards this cycle, which is even higher, as you can see, and ideally, but that's too early to know, of course, is for now, towards this cycle, and that could be huge. We're not going to trade it for 5 years or God know how long that might take. We are here on the shorter view, expecting these two waves, and to make sure we are in the gaining momentum structure. This is what we got. The first leg was gaining momentum, higher highs, higher lows. Two waves correction with a bullish hidden divergence in play, and right now we are gaining momentum again. So it looks good, and I expect a further move to the upside. And the other one in play is one of those I love, Ripple. Bullish divergence developing from the weekly with a massive holder on the psychological area of 02. Triple cycle from the daily time frame with a hold around the 161.8 expansion. Bullish divergence in play, as you can see, and for our chart, which starts to look interesting. Why? Well, first of all, the hold of the extreme. Second, the fact it already has two higher highs, higher lows. And what I would like to see here is correction and one more breakout. That will bring us back to higher highs, higher lows structure, with what I believe would be the beginning of the next rally. So alternative for that would be the break of the daily trend line. Both scenarios would be completely acceptable and tradable. And that's the list for the coming, the beginning of the coming week. Ahmed, what do I think about the CAD yen? Oh, wow. I was trying to figure out what's up with this pair. I think we are going up here in corrective mode here, like this. Can't say I'm crazy about it, to be honest. I am more bullish in this one, but can't say it's on my favorites. So that's all for today. I wish you guys a wonderful evening, day, night. Thank you very much for being here. Have a good trading, successful trading week. Don't forget, this is a non-farm payroll week. The moves could be more random or tricky in periods. It's important to remember that. Okay, and that's all. I'll see you in the Telegram channels as always. Thank you once again for being here, and have a wonderful, successful week. Ciao for now.